We're looking at Barron's list of the top 10 stocks for 2025. These companies earned huge amounts of money, more than $350 billion last year, meaning they may be interesting companies to look at. We're going to be looking at the stocks on this list to see which ones are potentially worth buying and which ones you might want to avoid. Plus, some themes on the list are going to stand out to you and may surprise you. Keep in mind though, the video isn't financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. Now let's get started with number 10, Alibaba. Alibaba Group, trading in the US under ticker symbol BABA, is a $205 billion market cap. Today it trades $15 above its 52-week low. Alibaba is one of China's e-commerce, financial services, and cloud computing tech giants. It made headlines for regulatory crackdown in China and after the late great Charlie Munger bought it for the Daily Journal and his family's personal portfolio. Right now, 7 super investors own this stock, and this is led by Michael Burry and David Tepper. Both of them have huge investments at 16 and 25% of their portfolios each. Alibaba was a big tech darling until the end of 2020. Since then, it's down 74% from their all-time high and still down 11% from where they IPO'd. However, their numbers do look very attractive. They're trading at less than half of their projected free cash flows and just a quarter of their median price to sales. For a pretty good tech business, they're even trading below their Graham number, which is a very defensive valuation. On top of this, Alibaba started paying dividends in 2023. Today, they have a 1.2% dividend yield and a 5.7% shareholder yield overall. With all that in their favor, a GF value comes in at $99 per share. That's up 16% and $16 from their current stock price. Stock number 9 is Alphabet, the parent company of Google, specifically their Class A or GOOGL shares. Today, this tech giant trades nearly at its 52-week high, and it's valued at $2.35 trillion. Alphabet is the second most owned super investor stock, with 31 of them having this in their portfolios. This is led by Li Lu and Altorock Partners, both as double-digit percentages of their US holdings. Alphabet also recently started paying dividends in 2024. Right now, they have a 0.41% dividend yield and a 2.7% shareholder yield overall. Not a surprise, since they went public in 2004, they're one of the top performing stocks in the market, increasing more than 76 times. Today, though, they look like they're trading slightly ahead of some of their valuations. They only come in looking good compared to a DCF based on their earnings, but they're out ahead of their free cash flows and their historical sales. With that in mind, their GF value comes in at $169 per share, which is down $24 from their current stock price. Next, stock number 8 is ASML. This is a $281 billion giant that today is just up $100 from their 52-week low. ASML is the world's leader in photolithography systems used to manufacture semiconductors. Its biggest clients are the world's largest chip makers. 5 super investors own their US listed shares, and this is led by Stephen Mandel of Lone Pine Capital with a 3.4% holding. Hillman Value Fund also bought a new 3% holding last quarter. Today, ASML looks like it's trading above their historical sales, earnings, and their free cash flows. However, this is a deeply entrenched business with few companies that are truly comparable. That's why a GF value comes in around $870 per share, or up $130 from their current stock price. At number 7, we have Berkshire Hathaway. Berkshire's B shares trade 6.5% off their 52-week high, and it's a $974 billion company. The insurance conglomerate run by the legendary investor Warren Buffett is owned by 19 super investors today. This is led by Guy Spear and the Bill and Melinda Gates Foundation Trust. Both of them have 22.5% of their portfolios in the stock. The combined numbers for Berkshire don't mean much because of the huge variety of their businesses. However, today they are priced below their Graham number, and they're just a little ahead of their historical sales valuations. Share buybacks can also give us a clue to their valuations, which Warren Buffett more or less paused in the back half of 2024. Citigroup, trading under ticker symbol C, is stock number 6 on Barron's list. This is a $134 billion banking franchise that today trades at its 52-week high. 7 super investors own Citigroup, and this is led by Kahn Brothers and Greenhaven Associates, both of them with 12% of their portfolios in the stock. Warren Buffett himself likely bought a 1.3% position back in 2022 as well. Today, Citi trades right at its earnings power, and they're below their Graham number. They're also around their historical sales, and they're less than their tangible book as well. However, there's not a whole lot being priced into the future of this business by analysts. A GF value for their stock only comes in at $57 per share, down $16 from today's prices. Today's Citi also pays an attractive 3% dividend yield and has a 4% shareholder yield overall. Now, as we hit the top 5, at number 5 we have Everest Group. This is a $17.5 billion insurance and reinsurance company trading in the middle of its 52-week range. Just one super investor owns Everest, and that's Berkshire Hathaway director Chris Davis, with just a small holding. Everest looks like they're trading at just about their tangible book value, and they may be attractive compared to a number of other valuations. However, they're in the long-tail insurance business. This can look good for a long time, and then they can still suddenly run into troubles. So you'd need to be careful, and you definitely want to understand how they're underwriting. Today, a GF value comes in at $403 per share, up $30 from their current stock price. Stock number 4 on Barron's list is LVMH, or Moët Hennessy Louis Vuitton. This trades in the US under their ADR ticker symbol LVMHF. It's the $316 billion luxury goods company that today is just $50 above their 52-week low. No super investors hold their stock in the US today, but this was last owned by Thomas Russo in the middle of 2024. Today, LVMH trades pretty close to its historical sales, and they're right at their Peter Lynch value. They're also coming in well below their DCFs based on both their earnings and their cash flows. Those contribute to one of the largest companies in the world being priced nearly $300 below their GF value. This comes in at 31% under that $951 target. The third stock in Barron's list is Moderna. This is the $16 billion biotech company that was a pandemic darling. Today, it's just $7 above its 52-week low. No super investors own this stock after Stephen Mandel of Lone Pine Capital sold out in the third quarter of 2023. Moderna has one of the craziest stock charts in the last handful of years. They're still up more than double their low over this time, but they're down 91% from their all-time high. Their stock has fallen off a cliff, and so have some of their fundamentals. However, today the company's priced just above its tangible book, and they're trading at less than half of their projected free cash flows, even though these cash flows were negative in the last year. As a biotech company, they've been harder to predict, and their value has gone all over the place. That contributes to their GF value coming in at $31 per share, down $12 from today's stock price. The second stock on our list is Schlumberger. This trades under ticker symbol SLB. It's a $54.5 billion giant that's $2 above their 52-week low. Schlumberger is the world's leading oilfield services company with more than 3/4 of its revenue coming from overseas. 3 super investors own this stock, and this is led by a 2.4% position from First Eagle Investment Management. Today, Schlumberger pays a 2.8% dividend yield that they grew by 10% last year. They've grown this 3 years in a row, recovering from the pandemic. Schlumberger looks attractive compared to where their sales have been at in the past. However, today they're slightly out ahead of their projected free cash flows. Still, their GF value comes in at $59 per share. That's up 35% from their current stock price. Now, are you ready for the top stock on Barron's list? Uber Technologies, trading in the US under ticker symbol Uber. This amazingly is a $136 billion market cap, even though it trades just $7 above their 52-week low. Uber's owned by 7 super investors, and this is led by Tom Russo with a 3% holding. Today, it looks like their stock price trades $5 above their GF value of $60 a share. What was the most surprising stock to you on this list? Let me know in the comments below. If you enjoyed the video and you want to support the channel for free, click the link in the description. This will take you to Interactive Brokers' Global Values affiliate.